This simple 4-step rules-based trading strategy got me funded over $1 million in 2025, with the goal of scaling my proprietary capital to over $3 million in 2026. This is the exact trading strategy that all of my exclusive members use, and here is a sneak peek of some of the incredible results that they've achieved trading this exact strategy. In this video, I'm going to walk you through every single step. There is 4 steps in total. For those of you that are new here, my name's Liam and I've been trading, investing and coaching within the financial markets for the last 8 years. And I'm a mathematics and finance graduate from Newcastle University. And so I like to think that I know a little bit about trading, mathematics and data. And so I would like to share with you everything that I've learned along the way. So with that being said, let's dive into the video. Just before I share with you step number 1, let me share you a bonus, which is step 0. Step 0 is proven track record. So in front of you right now is the track record of the last 2 years of trading this system. You can see we started in January 2024 all the way to December 2025. So there is 24 months of data right here. It's very important that you zoom out and you have that longer term time horizon. So the reality of trading is that you're going to have amazing months. You're going to have winning months, losing months, break-even months, and that is the reality. And so you can see that this system is extremely profitable over 24 months of data. You can see the total R return was 116 R. And so if we get an average, right, so 116 R divided by 24 months of data, that is around 4.83 R per month. So that means if you take an average month over the last 24 months of data, you can expect to have a 4.8 R month. So where this gets more interesting is when we look at the P&L. So you can see we started January 2024. And if you risked the same amount every single trade of $2,000, you would have made over $234,000 in the last 2 years. And so it's really from my final year of university where I specialized in data that gave me this data-driven approach. So you need to be tracking everything. So right here you have date of execution, the day of the week, the kill zone, so that's London or New York kill zone, the time of execution, win, loss, break even, the P&L, but more importantly, the R multiple. The asset that you're trading, for us, it's primarily US 500 and gold on the 15-minute time frame, the stop loss size, and the link to the trade as well. And finally, if there's any takeaways or notes that you may want to make. So it's important that you're tracking absolutely everything, right? And there's hundreds and hundreds and hundreds and hundreds of trades inside here. And this is where the data is coming from. So if we go all the way down to the bottom, right, you can see we have the sum multiples, right? So we have $233,000 and the sum of the R multiple of 116 R. So that is an extremely profitable strategy that is proven not by, a month of data, but over years and years of data. But the reality of trading is this right here. So what you're looking at is the R multiple on a monthly performance. So as you can see, you have amazing months. So for example, June 2025, a 15 R month. December 2025, a 10.8 R month. You also have losing months. So May 2025, minus 3 R. Jan 2025, minus 4 R. March, minus 4 R, right? And there's also around sort of break even as well, right? April 2024, 1 R month. But I'm here to tell you that this is the reality of trading. And what is important is that you are here long term to execute a proven, profitable, simple system and zooming out and having a long term time horizon. That is absolutely vital. And that's why this is step 0, which is the most important, because you need a profitable system in the first place before you can even think about trading. Okay, so in terms of strategy, step number 1 is the most important, yet I still see traders getting this wrong. And step number 1 is daily directional bias. And all that simply means is when you're turning up to the market, are you long bias, sell bias, or do you have no bias in this market? And so as you can see, there is 3 different colored lines on my chart right here. So you have the 50 exponential moving average in green, the 100 exponential moving average in blue, and the 200 exponential moving average in red. And so when the 50 EMA is greater than the 100, which is greater than the 200, this indicates to you as a trader that you have a long daily directional bias, meaning that you will only be looking for long positions. Vice versa, if we have the 50 EMA on the bottom, the 100 EMA in the middle, 200 EMA on the top, this would indicate to you as a trader that you have a sell bias market, and so you would only be looking for shorting opportunities. If the EMAs cross over, so let's say that the 50 crosses over the 100, and then let's say the 200's up here, this would be a no bias market, and so you would be sitting on your hands and waiting. Step number 1 was incredible, but if you don't understand step number 2, you will never be able to time the market correctly. And step number 2 is manipulation, in particular session-based manipulation. So as you can see, there is 3 different colored boxes on my screen right here. We have the Asia kill zone. This is between 6 p.m. until 11 p.m. London kill zone. This is between 3 a.m. and 5 a.m. And we have the New York kill zone in green, and this is between 8 a.m. and 10:30 a.m. Eastern. So we are not going to be taking any trades in Asia. Some of our trades we will be taking in London, but I want to make it very clear that the majority of the trades that I take, they are setting up in the New York kill zone. So between 8 and 10:30 a.m. Eastern. So remember, this is a long bias marker, right? 50, 100, 200, long bias. So I've removed the EMAs, but please keep that in the back of your mind. So we need to identify our points of interest. And so when you're long bias, you want to see price come down and take out a previous session's low. So we have the London low and we have the Asia low. So what you're going to be looking for is, can price come down, liquidate and manipulate below the London session low, or, we could get what I call an extreme manipulation. This is where we take out Asia low as well. Then once we have seen that, we can then look for our entry model, which I'm going to get onto in a moment, and then we can look at targeting higher prices. And so we're waiting. We're waiting for price to come down and take out at least the London session low. As you can see right here, we take out London low and we take out the Asia low. So this is what we call an extreme manipulation. And so what this is going to be doing right here, as soon as we get below the London low, as soon as we get below the Asia low, this is going to be inducing breakout traders into the market. So what they're going to do is they're going to get short on the breakout. They're going to have a stop loss around here, and they're going to be looking at targeting lower prices. They're also going to be doing that on the Asia low as well. So they're going to see that as a breakout to the downside. What this is also going to be doing is stopping out early buyers. So imagine you bought in London or you bought in Asia. You're going to have a stop loss. A lot of traders, a lot of retail, their stop loss is going to be below the London session low. It's also going to be below the Asia session low. And so this right here is going to be stopping early buyers out. But there's a lot of traders on the wrong side of the market. And so step number 3 will allow you to enter the market in a simple mechanical way. And step number 3 is entry model. So all that we're waiting for during a kill zone is a 15-minute bullish confirm. It's important to note that the manipulation, this can occur before the kill zone. However, the confirmation, and this is absolutely vital, the confirmation has to occur during the kill zone. So because we are trading the New York kill zone, our confirmation has to occur between 8 and 10:30 a.m. Eastern. But this is where traders go wrong. So you should not be entering on the closure. You should be entering on the break of the high. So what I recommend to do, if you navigate to the top left of your screen to the projection tool, open long position, you're going to place this just above the 15-minute bullish candle high. And so what we're looking for is the next candle to open, momentum to step into the market. We break the candle high. As we do that, you want to be getting long in the market because this is indicating to you as a trader that momentum is here, right? Buyers are showing their hand, and therefore the probabilities are now in your favor. You can do this via a manual market execution where you just click the buy or sell button, or you can do this by setting a buy stop just above this high, and then you're looking at getting tagged long. And so step number 4 will allow you to have a simple, repeatable, mechanical stop loss, and it will allow you to target the optimal risk to reward. So every single trade, just before we look at profits and what we're going to be targeting, what's more important is containing your downside risk. So your stop loss should go below the manipulation low. So this is your manipulation low right here. And so your stop loss goes just below here. And then I like to target a fixed, mechanical, repeatable 1 to 2 risk to reward. So we're not looking for a home run. We're just looking at taking a small, repeatable piece out of the market that is proven based on years and years of data, and that is optimal based on the data as well. And so I was tagged long in this trade right here. So I'm going to give you a bonus step. So step number 5 will dramatically improve your profitability and your consistency. And step number 5 is set and forget. So when you're tagged in a trade, you just need to allow the trade to play out. So you can see we've got a pretty significant drawdown towards the stop loss right here. But that is okay. You need to allow the trade to play out. Don't interfere. Don't micromanage. Don't get emotional. Just allow the trade to play out. So as you can see, this trade did hit take profit for a 1 to 2 fixed risk to reward. So we were tagged in right here, invalidation below manipulation, target right here. The duration of this trade was 2 hours and 45 minutes. So there was some element of patience right here. It didn't just fly straight to your take profit. You needed to be patient and disciplined and just to allow the trade to play out. And so just to summarize this trade right here, number 1, if you want to make a checklist, is daily directional bias. So we knew based on the EMAs, right, 50 greater than 100, greater than 200, that we have a long bias market.